But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold.
Why do central banks hold it? Well, it's a form of reserves. So why don't they hold diamonds? Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Welcome back to the Junius Maltby channel. Thanks for joining me and Mrs. Maltby, who sits off to the side. I already warned her this is going to be a long broadcast today. The US dollar collapse is greatly exaggerated. That's what we're being told by some out there with the counter-propaganda in the information war to prop up the US dollar and make everybody think that it's all okay. Everything's going to be fine. Stop worrying. Stop buying gold. Invest in the markets. Don't panic. Everything's going to be just fine. We've seen statements like this before. And what's interesting, we're going to get into both sides of this discussion, look at some facts, look at some numbers, and really break this down as much as we can in this medium anyways. But before we get started, it's important to look at what other experts have said regarding not necessarily a dollar collapse, but a major financial crisis like the one we saw back in 2007, 8, and 9. I've reminded you oftentimes when we look back at that time period and we look at the timeline of it, which I've featured here on this channel numerous times, and you guys can find those videos if you wish. There's certain key quotes that come from what we would consider, or some would consider to be experts, those in charge, those at the helm, those who we should trust. Now let's see how much they got it wrong, because these writers that put out these propaganda pieces from various financial outlets and so on, these editorial pieces saying that the dollar is the strongest thing ever, it's great, it's not going anywhere. To me, they're just the same thing. It's just people putting out information that they really don't know or base anything on other than their own normalcy bias, the fact that because they have never experienced it, it cannot happen. March 28, 2007, quote, "The problems in the subprime market seems likely to be contained," unquote. Benjamin Bernanke, Federal Reserve Chairman, March 28, 2007. This unfortunate collection of words by Bernanke has been quoted over and over again as proof the Fed chief did not grasp the gravity of the subprime debacle. He made this comment as part of testimony he gave to the Joint Economic Committee of Congress, and it came back to haunt him when the financial sector began to collapse. March 12, 2008, we don't see any pressure on our liquidity, let alone a liquidity crisis, unquote. This is from Alan Schwartz, former CEO of Bear Stearns, March 12, 2008. Schwartz was fending off speculation that the investment banking giant was in a cash crunch when he made this statement, trying to reassure investors that Bear Stearns was doing okay. March 16, 2008, we have more capital than we need. So we can say to the market that we don't need more injections. We can confirm that we have tackled the problem. John Thane, former CEO Merrill Lynch, March 16, 2008. Merrill Lynch would become insolvent September 15th. July 15th, 2008. I don't think the government ought to be involved in bailing out companies. George Bush, President of the United States. I would agree with that. I don't think they should have. They should have let them fail because they only came back. Here we are, 12 years later, begging hat in hand for more money. He made this statement in a press conference where he reiterated he felt the economy was basically sound. By the end of the year, the government would be involved in the bailouts of AIG, Fannie Mae, Freddie Mac, Citigroup, GM, Chrysler, Ford, every one of the 10 largest banks through TARP and the Fed loan window, and that still seems to be ongoing. July 16th, 2008. I think the system basically is sound. I truly do, Bush said. And I understand there's a lot of nervousness, but the economy is growing. Productivity is high, trade is up, people are working. It's not as good as we'd like, but to the extent that we find weakness, we'll move. George Bush, President of the United States, with 3 more financial outlets collapsing under the economic meltdown the week before, queues of angry people outside banks with no access to their money, inflation at its highest rate in 27 years, and scores of economists predicting a recession may tip into a full-blown depression, President Bush reacted by declaring that the economy is still fundamentally sound. As we wade into today's discussion, I just wanted you to keep those quotes in mind. I'm sure there's more of them, and even more recent ones on the recent financial debacles that we have seen. You have to make a decision. Are you going to believe everything you're told by the financial media, by the politicians, by the people in the Treasury and the Fed, the banks, or are you going to look at what's actually taking place, look at history, look at current events, all of these things, and formulate perhaps your own conclusion, your own gut instinct? Don't take my word for it. Don't take YouTube or anything you see on here. That's words for it. Not even any of the articles you read. You really got to just kind of digest this stuff on your own. I'm just a medium in which information passes through. I could easily be wrong on all of this. Who knows? Heck, maybe the dollar is going to exist for the next 1,000 years. However, I tend to not think so. But let's see some of the propaganda they're putting out currently, and I wonder why it's right now. The main article here is from Daniel Lacal. I believe that's how it's pronounced. Let's just get into it. The U.S. dollar index has lost 10% from its March highs, and many press comments have started to speculate about the likely collapse of the U.S. dollar as world reserve currency due to this weakness. These wild speculations need to be debunked. Do they, Daniel? Do they need to be debunked? The U.S. dollar year-to-date, August 2020, has strengthened relative to 96 out of the 146 currencies. That's because it's the currency is the leper with the most fingers left, Daniel. That's what we like to call the dollar. Just because it's a strong fiat doesn't mean it's anything to admire. It's still a fiat. And this was according to Bloomberg Universe's 96 out of 146 currencies. In fact, the U.S. Fed trade-weighted broad dollar index has strengthened by 2.3% in the same period, according to data compiled by Bloomberg. The speculation about countries abandoning the U.S. dollar as reserve currency is easily denied. The Bank of International Settlements reports in its June 2020 report that global U.S. dollar-denominated debt is at a decade high. In fact, U.S. dollar-denominated debt issuances year-to-date from emerging markets have reached a new record. China's dollar-denominated debt has risen as well in 2020. Since 2015, it has increased 35%, while foreign exchange reserves fell 10%. The U.S. dollar index shows that the United States currency has only really weakened relative to the yen and the euro, and this is based on optimistic expectations of European and Japanese economic recovery. Optimistic, very optimistic expectations. The Federal Reserve's dovish announcements may be seen as a cause of the dollar decline, but the evidence shows that the European Central Bank, Bank of Japan, conduct much more aggressive policies than the U.S. while economic recovery stalls. Recent Purchasing Manager Index, PMI, declines have shown that hopes of a rapid recovery in Europe and Japan are widely exaggerated, and the Daily Activity Index published by Bloomberg confirms it. Furthermore, the balance sheet of the European Central Bank is at the end of August more than 54% of the Eurozone GDP, and the Bank of Japan's is 123% versus the Federal Reserve's 33%. What we have witnessed between March and August has just been a move back from an overbought exposure to the DXY index due to the severity of the crisis, as investors increased positions in safe havens in February and March, only to reserve it as markets and the economy recovered. False recovery, I believe. The lesson most governments should learn is that economies do not become more competitive to deliver stronger growth and exports with a weak currency. Emerging markets have shown in the past years how a weak currency does not help, and the Eurozone has had a weak euro versus the US dollar for years, just as its economy delivered disappointing growth. The reason why the US dollar, the leper with the most fingers left, world reserve currency status is not at risk is simple. There are no contenders. That's a huge normalcy bias right there. There are no contenders. Not true. The euro has redenomination risk, and the constant political and economic concerns about the union's solvency make the currency weaken. What about the United States' solvency, Daniel? What about our solvency to make us weaken? And again, currency weaken as the historical performance has shown. It tends to strengthen relative to the US dollar when investors place unjustified hopes on the Eurozone growth only to weaken afterwards when poor growth adds to an overly aggressive European Central Bank policy with negative rates and massive money supply growth. The same things are happening to the dollar, Daniel. Negative rates are coming and there's massive money supply growth. The yuan cannot become a world reserve currency if the country maintains capital controls and concerns about legal and investor security remain. They're moving towards a digital yuan, and the free market will take care of that, Daniel. We'll see. There is a Cold War in currencies taking place. The China Central Bank, PBOC, is also extremely aggressive for a currency that is only used in 4% of global transactions, according to the Bank of International Settlements. We are living a period of unprecedented financial repression and monetary expansion. The US dollar reserve status grows in these periods where countries ignore real demand for their domestic currency and decide to copy the Federal Reserve policies without understanding the global demand for their currency. When the tide turns, most central banks find themselves with poor reserves and lower demand for domestic currency risk, and the position of the US dollar as reserve currency strengthens, in my words, temporarily. This is not a year of US dollar weakness or the end of its supremacy as reserve currency. What we are witnessing is a generalized fiat currency debasement through extreme monetary policy. So we're seeing generalized fiat currency debasement through extreme monetary policy, which could lead to currency collapse. That is the reason why gold and silver continue to rise despite hopes of an economic recovery that seems to be stalling. The US dollar will likely remain, it might not though, likely remain the most demanded fiat currency, but the excessive monetary stimulus will ultimately damage the confidence in most fiat currencies, especially the dollar. Now, Daniel's article made the rounds. It got picked up by some other outlets and was reprinted in other places as well. As you can see here, fears of U.S. dollar collapse greatly exaggerated. In this second paragraph here, it says, while the dollar index, which tracks the value of the greenback against majors, is down nearly 5% on a year-to-date basis, the greenback has appreciated against 96 out of 146 currencies. To that, I say big deal. And this is in the Bloomberg universe. As such, it may be too early to predict the demise of the dollar as the global reserve currency. Is it really too early, though? This reprint of that article closed out with this statement at the end. Analysts at Goldman Sachs said earlier this year that gold may replace the U.S. dollar as the reserve currency. I'm going to read that part again. Analysts at Goldman Sachs said earlier this year that gold may replace the U.S. dollar as the reserve currency. The yellow metal has risen by over 25% this year, with government bonds offering negative real or inflation-adjusted yields. I sent out earlier a piece we did back in January, before any of this information was out, before any of these current crises were unfolding, talking about $5,000 to $10,000 gold in the coming decade. And that video put out by this channel discussed some of the reasons why that's likely to occur. And that was before any of this discussion. And I do believe gold is moving into that position to replace the dollar. But that, again, that's my opinion. Let's keep going here. Now, speaking about what's going on, the current debacle, the unfolding crises that just seem to keep coming, This was in the news earlier today, executive decisions being discussed by the administration as the White House is moving to give Americans more COVID relief as Congress is deadlocked. And it's just a big bunch of BS. I mean, you read through the articles, it's free money. They've got billions, I guess 300 billion in one account they haven't spent yet. Look at these sub-headlines here. You've got Senate fails to advance targeted 300 billion COVID bill relief in limbo. You've got Fed ramping up a probe into the PPP fraud, charging 57 people with trying to steal $175 million. And there's just a tremendous amount of fiat that is being given out, distributed. There really doesn't seem like there's any accountability to it. I can imagine how money is just disappearing and vanishing and being created out of thin air and given to whoever. You know, a lot of times politicians seem to be benefiting from these policies and these stimulus programs. This is just further evidence, the erosion of the dollar, how it is worthless, how they're just creating it out of thin air and just pumping it into a dying zombie economy. But let's move on and look at some more fiat information. Some of you might remember a few years ago the memes that came out and how part of the cryptocurrency community created some data and information they put out showcasing how fiat currencies have an average lifespan of about 27 years. And I got to be honest, in all the studying and all the reading I've ever done and looking at fiat currencies, their track record, the amount of extinct fiat that's out there, it seems to be fairly accurate, their numbers, 27 to 30. Doesn't really matter, even if it's 35 years, the average. The fact remains that fiat currencies don't last forever. They have nothing compared to the 10,000-year track record of precious metals when it comes to being used on the planet as money. Again, they're not money, they're just currencies. They represent something of value, which is now nothing. And this article was put out a year ago by a Jemima Kelly, and it was essentially put out as another, I guess you could call it, counter or hit piece against people that believe that way, trying to, in a way, a roundabout sort of way, prop up fiat or show some support for it. Again, saying that our negative sentiments towards fiat are overblown or exaggerated. A crypto news site ran an intriguing story last week under the headline "Bitcoin has already reached 40% of average fiat currency lifespan." This is this article is discounting what the Bitcoiners had put out. Again, sometimes they find themselves, the Bitcoin crowd, in alliance with those in the gold community when it comes to our counter-fiat sentiments and beliefs here. We could hear the tiny sound of your eyeballs rolling to the skies before you even got to the headline. The article had a video to accompany it and everything, and was pretty widely picked up by Bitcoin bros who may or may not self-identify as Bitcoin bros on Twitter, like this guy. And then she goes on to share some of those pieces of social media. But let's get into the information that she's trying to use to counter this. I didn't tear this entire article apart to put into here, but here is some of the key pieces, the takeaways. The 27 Club. Is there any truth to it? Or did the author just decide it would be kind of neat for fiat currency to join the 27 Club? First of all, it's important to get clear on exactly what a fiat currency is, as there seems to be some confusion on this point. Bitcoiners tend to just use it as shorthand for central bank issued currency, but actually it's a little more nuanced than that. And I would actually find myself in agreement with the Bitcoiners on most of their observations, if not all of their observations regarding fiat currencies. Here's Koning. Fiat currency is generally considered to be inconvertible money. It can't be redeemed for gold or silver. The world really only shifted onto a fiat standard between 1968 and 1971, as the dollar ceased to be redeemed in gold. But Hewitt's list is replete with many metallic currencies, i.e. Rick's dollar, Rick's mint, are people using his data to make a claim about currencies in general or just fiat ones. The meme isn't clear on this, but it does seem that Hewitt, the originator of the meme, did do some actual calculations to come up with the 27-year thing, albeit using some very selective methods. Now, I've presented on this channel over the years several lists of extinct fiat currencies and talked about and discussed the number of currencies that have died and gone away. Here she says Hewitt claims to have counted 176 currencies that are still in circulation and 599 that are not. Koning downloaded the full list to check Hewitt's calculations. It turns out that you can indeed arrive at an average lifespan, more on that in a bit, of 27 years. But that's only if you make one fairly significant omission. Yep, that's right. It only is true if you leave out all 176 currencies still in circulation. So just a little misleading, it seems fair to say. I would interrupt her and say that show me one currency today that is actually redeemable for precious metals or backed by anything other than a basket of other currencies, or it's floating against the US dollar. They are really all truly fiat, and all of them have gone through a reset, if you will, back when Bretton Woods finally died. And the other thing is that these 599 currencies are no longer in circulation, didn't all just spontaneously combust, as the meme implies. Rather, they were actually deliberately replaced or ended for economic, political, or social reasons. Yeah, they ended for economic, political, or social reasons. They ceased to exist, many times with a reset ratio. There was a great reset in any of those currencies in an exchange for, perhaps 3-to-1, 2-to-1, 6-to-1, 5-to-1, 10-to-1. People did lose wealth many times in these transitions. So, and then we'll continue here. She says, so the idea of counting up these currencies, quote, lifespans just doesn't really make that much sense. Actually, it does. Those currencies no longer exist. If they were absorbed into the euro, they don't exist. Those currencies are, by all means, officially dead. If you're sitting on suitcases of old Italian lira or any of those European Union currencies that were absorbed into the euro, they're not worth anything anymore, and I think the exchange window is gone. So again, yes, they are dead. From Koning again, the list contains all of the pre-euro currencies, the Dutch guilder, French franc, Italian lira, we just mentioned that. These currencies had good reasons for disappearing. They were swapped for a new monetary unit. Okay, that is a reason for a currency to go extinct. Just because they were swapped doesn't change my belief that those currencies ceased to exist. They were absorbed into a new monetary system, which could occur today and extinguish the US dollar. If something like that were to take place, the dollar would cease to exist. So to say that the dollar could cease to exist is not inaccurate. Existing currency holders weren't robbed. They were fairly compensated for this switch. That's a pretty loose term, fairly compensated, and very debatable indeed. Another example of monetary reorganization occurred in East Africa. From 1919 to the 1960s, Britain's former East African colonies relied on the East African shilling, produced by the East African Currency Board. When these countries gained their independence, the currency board was dismantled. In its place, Kenya began issuing its own shillings at par with the old ones, as did Tanzania and Uganda. And I wonder how well those currencies are holding up these days, floating against gold and silver. In each case, existing owners of East African shillings could convert their holdings into new currency. No wealth was being destroyed during any of these switches. But people who throw around the phrase the average life expectancy for a fiat currency is 27 years as a criticism of the very institution of currency are using the data in a way that implicitly assumes that the East African experience and others like it were negative. They weren't. Oh, okay, so this is a significant apologist piece for fiat currency, saying that perhaps it just wasn't done right there, or, it really, they didn't go extinct, they just changed the name of it and the appearance of it. Everything was fine. And again, it's a multifaceted argument, because a lot of these currencies ended up deteriorating dramatically, and they may have not have gone extinct per se, but they were utterly and near entirely destroyed, their purchasing power falling by thousands of percents. So regardless of what the accurate number is, I really don't care if it's 27, 30, 40, or 50. We do know that All fiat currencies ultimately will reach their intrinsic value, which is zero. That's a fact that we've come to accept here. They do have a lifespan. The average lifespan of fiat currency seems to be debated with certain dates placed on it or certain shifts in economic policy, whether or not there was a reset or if it was renamed or absorbed into another currency. None of that really matters. The fact is, fiat currencies do die, and most often they do in less than 50 years. The US dollar has been completely unpegged and disassociated from anything sound since 1971. That we know to be true. So we're going on around a little over 40 plus years now, 49 years, whatever, since the dollar was unpegged from gold and now just floating as this world reserve currency, which is now being threatened and debated, and people are looking at lessening their exposure to it. And many believe that the dollar days are numbered. Now, I'm not saying it's going to die this year or next, but it is something that is going to occur. The dollar's days are numbered. And there are headlines from other experts that seem to counter that first article we looked at. Here's one right here, right now. This is from June 8th. Markets, this is from Bloomberg Opinion, a crash in the dollar is coming. Not that the dollar is going extinct, but a crash is coming. The world is having serious doubts about the once widely accepted presumption of American exceptionalism. We've covered this and a lot of this information in previous videos, but we have to review it again for this one. The era of the US dollar's exorbitant privilege as the world's primary reserve currency is coming to an end. Then, French Finance Minister Valéry Giscard d'Estaing coined that phrase in the 1960s, largely out of frustration bemoaning a U.S. that drew freely on the rest of the world to support its overextended standard of living. For almost 60 years, the world complained but did nothing about it. Those days are over. U.S. dollar at risk of sudden collapse? Ex-IMF official warns, quote, blow-up event could sink currency as debt mounts. Reading part of this here. There is a rising risk of a sudden loss of confidence in the U.S. dollar, according to a former senior executive with the International Monetary Fund. Zhu Min, who was deputy managing director of the IMF from 2011 to 2016, said the U.S. dollar's position as the dominant global currency was at risk of being eroded because of mounting U.S. government debt. The concern isn't whether the U.S. dollar will see an accumulated decline of 30% in the future, but whether there will be a blow-up event that causes a sudden loss of confidence in the U.S. dollar and its market to collapse, unquote, said Zhu, who is currently head of the National Financial Research Institute at Tsinghua University in Beijing. Past an unknown critical threshold, using monetary policy to deal with public deficit, could see the collapse of U.S. dollar currency hegemony as people lose faith in it, Every said. All systems can only be pushed so far. Does the world still want a U.S. dollar-centric system if U.S. dollars are openly printed to fund the state spending that drives the external deficit? Stephen Englander, global head of G10 currency research and North America macro strategy at Standard Chartered Bank New York, said the slide in the U.S. dollar's share of global reserves in the past 2 decades represents the combination of a lower U.S. dollar share in China's reserves and the selling of U.S. dollars by reserve managers. The ability to exploit its reserve currency status for political purposes is reflected in the U.S.'s use of the global financial system to sanction opponents. This began in the Clinton era, 1993 to 2001, and expanded under subsequent administrations. The threat of such sanctions probably conflicts with the U.S. dollar's public role as a reserve currency, Englander said. The U.S. dollar looks worse as a reserve currency when financial markets are tranquil, Englander said. When the liquidity is no longer required, unneeded U.S. dollar balances will be put back into the market, and the U.S. dollar will likely fall. A sell-off against a basket of major currencies has continued since March, and on Thursday, the U.S. dollar hit its lowest level since September 2018. From July 29th, 2020, will the dollar collapse? This is another piece. So, will the dollar collapse? This is not the first round of, quote, will the dollar collapse, unquote, and it certainly won't be the last. The dollar will not collapse now, and will very likely not collapse anytime soon, or so he says. Remember, you can't listen to these people's prognostications because they are often wrong. If it does, we will see it coming. But will you? Nobody saw anything else coming, my friend. They didn't see the collapse of 2007, 8, or 9. They didn't see the collapse coming this year. They didn't see the rise in the prices of gold. So what makes you think these supposed experts will see it coming? He goes, we will see it coming, but it's not coming now. No, you don't see it, and you won't see it. We save the best part for last, always, just to reward those who can hold on and stick around through a video. And this is an article, this piece comes to us from some of our crypto friends, because they often like to attack fiat just as much as we do. How fiat money fails, deconstructing the government's paper-thin promise. Fiat money has a surprisingly short lifespan. The almighty US dollar, currently serving as world reserve currency, is not exempted, in spite of all proclamation that it cannot fail. Throughout history, fiat money has failed over and over again, where sound assets like gold have survived. Ruling out acts of God and unforeseen circumstance, the number one reason fiat fails is due to unsound economic policy. This is where gold and Bitcoin stand to truly prevail. Now remember, this is coming from a Bitcoin crypto guy's perspective, but still the information here is valid, so please don't focus on that and get distracted. Just listen to the material here. Good as gold. There's a reason no one hears people saying good as fiat to describe something trustworthy or valuable. Gold has been used as currency for thousands of years, since at least 700 BC, when it was favored by Lydian traders, and I would say much earlier than that even. The oldest fiat money, still being used today, has only been around for a little over 300 years, beginning in 1694 with the founding of the Bank of England. Now, I would say that's not entirely true, because back with the Bank of England, the pound sterling and much of the currency was indeed gold and silver. You had the sovereign, you had crowns, you had shillings, and then they slowly removed precious metals from the establishment and how the economy was run and the currency that was utilized with the Bank of England, and then it became solely fiat only in the last century. So it's not really 300 years. It's a 300-year-old currency, but I would say that it's not. It was not wholly fiat prior. But again, I understand his point there. With the founding of the Bank of England, prior to its use as currency, gold was used in barter and trade all over the world in the absence of political mandate. By contrast, fiat means by decree, or let it be done, and depends on the force backed by laws of a state or monarch to demand its use or else. And we've covered that here when you look at the executive orders regarding even precious metals and the coinage acts and the history here in the United States alone. It's very apparent that the advocates of fiat never admit and never fully understand that fiat currencies never stand alone or live on their own merits. They require force and laws and statism in order to exist. You have to literally be forced into the usage and transacting with it. There has to be things like legal tender laws and trading with the enemy acts, things that bar you from using any other currency or any other medium, and you're forced to operate under their umbrella of monopoly, their monopoly of currency issuance. And if you do not comply, they will come, and men with guns will either take you away and put you in a cage, or they'll kill you. That's a fact. It's just the way it works. Ultimately, those are the consequences of not complying with their statist acts. Exponential failure. A recent tweet by user @100trillion makes an interesting observation. When fiat failure strikes, it tends to happen first as a gradual build, and then spiral out of control suddenly, skyrocketing to oblivion. The German gold mark was a gold-backed currency for the empire from 1873 to 1914. After the gold standard was abandoned in 1914, the paper mark would soon become worthless, hyperinflating itself to toilet paper tier within 10 years. This is an extreme case, to be sure, but even where the most reliable fiat money is concerned, it always devalues into relative worthlessness at some point. As mentioned, the current title holder for longest lasting fiat currency is the British pound sterling at 325 years old. I don't know why they keep repeating that, because it was tied to gold and silver back then. It might have been fractional reserve. However, there was the pound, the sovereign, and all of the silver and gold coinage at the time. So I really don't make the connection that he is. I would say that the fiat pound has existed for much less time than the 325 years. Maybe some of you UK guys can chime in on that, on the monetary history. We've covered some of the monetary history in the UK here before in various videos, and we know that they removed silver back, 1919, and gold before that. So really, I would say the last century, it was wholly fiat. Compared to its initial value in silver when it was created to help finance war in 1964, it has lost almost 100% of its value. The devaluation story of the US dollar is no less dismal, as noted by one prominent inflation calculator. And there you can see above it a picture of the Reichsbank, Berlin, October 1923, tables of useless and worthless fiat paper. So the real question with fiat is not how stable is it, but how long until it's suitable for kindling. A much cited but highly disputed 27-year fiat lifespan study, we just went over that, found that 20% of the 775 fiat currencies examined failed due to hyperinflation, and that 21% were destroyed in war. 24% were reformed through centralized monetary policy. You see that one article left that out. Yes, it acknowledged that 24% were reformed through centralized monetary policy. This means that the majority of failure or discontinuance of fiat is by way of government intervention, warfare, and economic policy. Emphasizing the inability to wage large-scale warfare in the absence of this paper fiat, dollardays.org states that initially money is a tangible commodity. That commodity is then concentrated by those who issue paper receipts, merely representative of the underlying commodity. The reason for doing this is to lend out more in paper receipts than what can be legitimately backed. In other words, the powerful amass hard assets via scammy, obfuscated pilfer, while the poor suffer hardship, forced to use the garbage currency being offered instead. Remember what we discussed several months ago in Karl Marx's observations and views on what is money and why gold ultimately is always money. Now here's a cool chart, the Honk-Kruse hyperinflation table. This is just part of it. Shows you some key currencies and the start date of the hyperinflation, the end date, the month with the highest inflation, highest monthly inflation rate, equivalent daily inflation rate, the time required for prices to double, tells you the currency and type of price index. As mentioned earlier, it kind of creeps up slowly, and then the velocity and the parabolic rise in the inflation seems to come quickly after that. And that's obvious when you look at the start date of these inflationary events and the end dates. All of them really happening within about a 1 year time span, 1 to 2 years from the onset to the peak and then the extinction, essentially, of that currency. Another thing I like to look at on this chart is the time required for prices to double, because that really sinks in with people when you're trying to explain something. If you went to buy a loaf of bread one day and then you went back the next day and the price had doubled and the day after that it doubled, that's a pretty significant rise in prices. And as many of you know, if you've ever played that game where you double a penny every day for 30 days, what that turns into, it's pretty insane, the doubling effect. Just look here, Hungary, it was 15 hours for prices to double. Zimbabwe, every 24 hours. For Yugoslavia, 1.4 days. Germany, 1.4 days, it looks like, or unless it looks like 3.7 days. Greece, 4.27 days. And then China, 5.34 days. This is just a small example. All of these taking place in about the last century or so. 1947, 41, 1922, 92, 92, 2007, and 1945. And there has been other cases within that time span as well. This is just a small cross-section of several. Modern fiat faceplants. For a highly detailed list of modern cases of hyperinflation, the Honk-Kruse hyperinflation table is an eye-opening resource illustrating the unreliable nature of government money. Though now slightly dated and not including recent examples like Venezuela, the data is presented in starkly direct fashion. In August 1945, prices in Hungary doubled in only 15 hours. Brazil experienced a daily inflation rate of 2.02% from December 1989 to March 1990. Even Austria is not immune historically, the crown hyperinflating for almost a year from October of 1920 to September 1922. The Honk-Kruse study is a sobering reminder of what happens when sound economic principle is ignored. As Austrian school economist Ludwig von Mises puts it. Ludwig von Mises. The most important thing to remember is that inflation is not an act of God, that inflation is not a catastrophe of the elements or a disease that comes like the plague. Inflation is a policy. And further, the gold standard did not collapse. Governments abolished it in order to pave the way for inflation. The whole grim apparatus of oppression and coercion, policemen, customs guards, penal courts, prisons, in some countries even executioners, had to be put into action in order to destroy the gold standard. Whether or not one agrees with the proclamation of the renowned economist is immaterial in the face of the economic reality. Fiat money is, was, and always will become worth less over time by its very nature. Bitcoin and crypto stand remedy to this if leveraged properly and by a large and determined enough market. And I would also include in that, obviously, and of course, being that we are here on the Junius Maltby channel, gold and silver. Judging by the current regulatory climate and history itself, however, fiat won't fall without a fight. However, it will decrease in value and purchasing power. There will be resets, paradigm shifts, and all kinds of changes. Who knows what they have in store, what the agenda has planned with the Fed and the Treasury, the European Central Bank, all of these parties involved, the Bank of International Settlements, the IMF. We've seen it all. Wall Street, the cabal. There are things taking place, shakings and shiftings, and ultimately, I think all of us here on this channel can agree that fiat is going to go the way that it always has been and will ultimately reach the intrinsic value of zero. It will be eliminated, it will die, something else will rise to take its place, and the cycle will continue. The only things that ever hold value are real money, sound money. And sound money will always be, as it always has been, gold. Gold and its little brother, silver. That's it for today. If you want to continue your subscription to Normalcy Bias magazine, you can continue believing that the dollar will never succumb to the laws and the forces that take place in economics and that have affected every currency before it. To believe that the dollar cannot go extinct, to believe that it cannot collapse, is the most insane position of them all. It's far more insane than calling for it to collapse in near time, for sure. The people that think that it cannot collapse are only fooling themselves or blatantly trying to lie to throw others off. So don't listen to them. Ignore those that write these pieces that say that the dollar is strong, it's going to be all okay, it's fine, everything's all right. Don't worry about it. The fundamentals are strong. Only the crazy people think that the dollar is going to be replaced or go away. They don't get it. They don't understand. And if anything, they just don't care. Well, thanks for tuning in again. Apologies for such a long episode today. This is 45 minutes of extemporaneous ramblings from a madman in his bunker. But oh well, it was necessary. Hope you all enjoyed it. Thanks for supporting the channel, being part of the channel. Go ahead and hit a like on your way out. And if you're not subscribed, please do subscribe here on the Junius Maltby channel.